pressure. In fact, when you're looking at the Indian IT index yesterday, there was clear and evident pressure. Let's bring on board Rahul Shah, Associate VP, Group Leader, Equity Advisory Group at Motilal Oswal Financial Services, to probably try and speak a little bit about that. Rahul, let me try and dissect this piece. How large of a risk is AI on Indian IT, and what's new, in your opinion, that came out yesterday that kind of triggered this sell-off? It was a massive sell-off. 6% lower on Nifty IT is huge. You believe that we could continue to see a slide, or is this really a buying opportunity of sorts?
Hi, good morning. I think if you look at the IT sector as a whole, in the last 2.5 years, it has been struggling with the earnings and with a flattish kind of a growth. And that is what the underperformance we have seen in last 2.5 years in the IT sector. Again, I think what we see in the markets is, I think market gives P for the growth. And when we don't see the growth coming back, I think P keeps on getting compressed, and which is the reflection in most of the IT companies. Now, coming back to the yesterday's event, and if we look at it, I think where the IT stocks were hammered, I think they were definitely negative for the technology as a sector, which was struggling for the growth. And now again, post this, I think we will see some kind of more nervousness in the moods of investors, as well as the companies reporting would be more of a flattish kind of a growth. So I think there are pockets where there have been, where the sectors have been doing well, and there's a growth vis-a-vis this sector with a flattish or a negative kind of a growth. So I don't think so. The mood will be continued to be positive. You might see some kind of more weakness in most of the IT names. There could be some opportunity as well, but I think still there's a time for all these IT companies to stay in. So I would rather avoid any of the IT companies at this juncture.
Kunal, while it's avoidable timing it to the T, but do you think after yesterday's fall, these are good prices to buy into IT counters?
Yeah, it is. In fact, what happened yesterday was when the Nifty IT index was down 5.5%, the indices had come back towards 3 to 3.5 sigma Bollinger Band, which is on the lower side. That's generally an aberration of sorts, and we don't see that sustaining for more than a couple of days. In these kind of scenarios, and there generally is a mean reversion which happens into the stock prices or in the asset classes, in this case the index. So I think in that sense, I would probably believe that it's a good time to try and nibble into these IT names. But then, as I said earlier, that you have to be a lot more specific with the kind of stocks which you're looking to buy. Even in the last, I would say 6 months or so, there have been multiple signals which emerged from the IT pack. It started off with very few couple of IT names, large cap IT stocks, which start to show signs of recovery, and then it got trickled to the underperformers. Even now, I would believe that you'll have to be a little bit more on the selective side over here. Something like HCL Tech, Mahindra, something which I've been recommending since last, I think, few weeks, months. I think those stocks, they continue to remain a lot more stronger, bullish with respect to the large cap IT pack. Persistent as well as Coforge, I think they are the ones which still look very strong on the mid-cap IT front. So I think in that sense, you start off to be a little bit more selective. Once this aberration plays out, once you see normalization or stability coming back into the IT index, that's where you might probably expect that the underperformers could probably take a leap.
Rahul, on the IT pack, the kind of commentary which have coming from some of the AI players like Palantir or Anthropic, it seems that the entire model of time and workflow economics, which Indian IT, is a main source for revenue for them, it's under disruption there. Do you see that unless the Indian IT starts investing heavily into AI models and not just doing a AI wrap-up kind of job, there is a risk to the valuation for many of the IT companies?
So I think I agree with you. I think if you don't involve and more spend on the AI thing, I think, which is the buzz, and a lot of time has been gone into it, and then where the AI has proved it to have been, fruitful, and a lot of things automations have done. So maybe I think timely, if most of the IT companies keep changing, I think and spend on them, I think that will evolve for the growth for themselves. And if we few of the pure mid-cap companies, if we look at it, they've definitely gone into and their numbers have been quite good and then they have been sustainable. The only thing is, I think, again, at what valuation would you enter into this kind of a companies where you are focused on AI? So, but my sense, I think, in the large player, like TCS, Infosys, HCL, I think way that there's a large institutional holders who've been selling, and I think there could be more nervousness. So there would be some point and maybe kind of a spend by them, which initiative would bring some kind of momentum back in this kind of stocks.
And if that is the case, what we are looking is that while on the gross margins, it would be somewhere around 40-45% for many of the IT companies. As they start investing in them, your EBIT margins and EBITDA margins are likely to shrink for many of them.
So if you look at it, I think most of the companies which I mentioned earlier, also in the large players, also there have been a flattish growth, 3%, 3.5%, and kind of on for the large companies and maybe a flattish, and obviously the margins were able to sustain. But post this, I think more of focus on AI. I think that's going to get a hit on the margins as well. So I think broadly, I think it's a negative for the most of the technology stocks. And as I said, there's one bucket where you have other opportunities in other stocks or maybe other sectors. I think one should swap or one should wait and any further investments in the technology stocks at this juncture.
So, just looking at a whole host of other earnings, there's of course Trent, wherein the results are above estimates. There's Metropolis, decent set of numbers there as well. Net profits higher by about 32%. Medanta too has delivered a good set of numbers. Their ARPOBs have seen an uptick of about almost 10% come by. Apollo Tyres, the net profit has jumped up a good 40%, and they're looking at a sizable 5,800 odd crore rupees in capacity expansion at their Andhra plant as well. Marico, they're looking to acquire a 60% stake in Cosmix Wellness for about 226 odd crore rupees, valuation of about almost 375 odd. And that even Coal India has got that investment, or rather nod for investment in a JV with DVC, and it's a sizable investment of about 3,100 odd crore rupees. Kunal, the same point that we were making yesterday as to how some of the PSUs, ex-banks, are looking very, very strong on the charts, and we were discussing an ONGC, Oil India, NTPC, PFC, REC. If you had to just pick two names to trade and go long at this juncture, which one would you pick?
See, I think ONGC would probably stand out over here because there are a couple of things which have happened on the charts. One, on the technical front, we've seen the stock breaking out of multi-quarter resistance or a consolidation of sorts for ONGC. That's a very good positive, because when stocks come out of multi-quarter consolidations, they generally tend to start a rally which could not be very, very short term, but it could be more medium term as well in many cases. So I think in that sense, this could be a good breakout. Oil India, on the other hand, I think is also another stock which has come back into a breakout mode. The stock in the last, I think, 1 week or 7-8 days, to be precise, I think has seen a huge jump up in terms of volumes. The stock, which was trading below the 200 moving average, a few weeks back, has now managed to surpass those levels by a huge margin and is trading with a very fair degree of a buffer in terms of the long-term moving averages. Yes, the stock is a little bit more high beta with respect to ONGC, but for guys who have a slightly higher risk appetite, this could be a good point where traders could look at a buy. Even the likes of NTPC from the PSU pack, I think still looks very attractive. So the stock has come back into a bullish flag formation breakout, and I think at current levels I would look at a decent upside of at least 10% into the stock price over the next 1 to 3 months.
Okay, clearly those two PSUs on Kunal's radar, and he's sounding very bullish with regard to those. Rahul, let me come back to you, and let me also bring on board Somil Mehta, Head Alternate Research at Mirae Asset, joining us this morning. Welcome, Somil. Quick question with Rahul first off. Rahul, what do you make of the kind of textile sector moves that we've seen in some of the counters? Has a better part of the move been done? Are we behind? Are we in front of that move now? And is that move behind us? Or do you expect this move to be structural? And therefore, you might well continue to see this play out over the next year or two?
I think post this, I think the tariff deal, I think a lot of textile companies which were underperforming, I think post that have rallied also. So, but as you rightly said, I feel that there will be a structural changes in a lot of companies and a lot of sectors as well. And so, one of the key beneficiaries, I think, for this is a textile sector. So I think it's not just the Europe deal or the US deal. Both the deals have done quite for us. So my sense is I think the entire sector, textile sector as a whole, should continue to do well for the next 2 years. And I think one should stay invested or look at opportunities whenever there's a fall in any of the stocks.
Okay, clearly bullish textiles. Somil, let me come to you with regard to textiles itself. How are you viewing some of the counters on the charts? I know Gokaldas has hit, I believe, has hit upper circuit again yesterday. So maybe not that one, but what about some of the other textile counters? A PDS Limited, we also spoke with a couple of names yesterday and day before. How are they looking on charts to you, and any favorites?
I think absolutely. All the textile stocks are looking good. Gokuldas definitely looking good. Trent, and there was one more stock, Vardhaman. I think that stock looks good as well. But I think I'm more looking into Page Industries, one of those, one of the stocks which are trying to reverse from the very bottom and trading about 20 and 40 daily moving average. Small triangle pattern has broken on the upside. So this is the stock which I'm looking for. I think there is a very good upside here till at least 37,000. Right now it is trading around 34,500. Stop loss should be around 33,350. A very good risk reward here, and I'll be looking for a very good run up here.
Okay. Also, what's the take on Trent, Somil? Because you have numbers come out, a very decent set of numbers. Likely the stock will react positively, but the stock was up 5% yesterday. That's obviously for viewer perspective. So not sure how much of this was already built in, but how is it looking on charts, Somil?
See, there are a lot of stocks which are already beaten up a lot, like Dixon, Trent. There are a lot of Page Industries. So these stocks, even DLF from the real estate pack. So these stocks have started reversing now, started forming high tops, high bottom. One of them is Jubilant Food as well. So Trent, very specifically, a small ending diagonal pattern has broken on the upside, forming high tops, high bottom. Yesterday, there was a very good move, and I'll be expecting this move to continue now in the very short term. My target for Trent would be around 4,460, which is a previous swing high on the weekly charts. Now the stop loss, very strict stop loss, because in the medium term outlook, it is still trending down. So I'm only expecting a short term reversal here. Stop loss should be very strict, around 3,800. But see, the correction which we've seen in Trent or Dixon and these very beaten down stocks, they're very sharp and very for Trent, from 8,200 to 3,600 bottom. That's a very good correction, and I think a very good short-term bounce is expected. So yes, short-term bounce expected, positive on this stock. Buy on decline should be the strategy.
Okay, buy on declines. Rahul, let me come to you with regard to Tata Power in particular. Soft overall in terms of the top line, but robust delivery on EBITDA as well as PAT. How are you looking at the numbers broadly?
I think broadly the numbers are in line with it. I feel that what we saw in the last quarter numbers, September quarter, the numbers were a little weak. And if we compare on quarter with this last quarter, then I think the numbers were better, or maybe in line with what the street was expecting. And most of the power companies, if I look at it in an unlisted way, I think Tata Power trades reasonably in terms of vis-a-vis others. So I think it's going to be a steady performer, and I feel that it's going to be compounded 12-15% in terms of it. So I think one should stay invested in Tata Power.
Okay, what about Tata Power on charts, Kunal? What's the view?
See, I think on the shorter term charts, the stock had struggled, because I remember, I think in 2024, the stock had come back towards almost 500, and from 500, the stock gradually over the last 2 years corrected almost 30-40%, has come back towards 300 kind of a zone. This was the recent low for Tata Power. So it struggled in the last 2 years or so, but now I think at current levels, with the money coming back, or rotationary money coming back into the power sector, you look at the likes of NTPC, traditional power names, look at Power Grid, the stock which has done phenomenally well post results. I think 10-15% plus kind of a jump in a very short span of time. It's bound to be that at some point of time, stocks like Tata Power would also see that momentum shift. So I think in that sense, one has to try and take pre-position on the stock. I would believe at current levels it looks attractive. May not be the best stock with respect to the peer group, at least on the shorter term charts. But then when you look at this in terms of positioning and the money being rotated towards the power sector, I think eventually Tata Powers could also see a decent rally from here on. So for traders who have a slightly higher time frame, maybe 3 weeks to a couple of months or so, I think it's a good time to try and chip into this name.
Okay, a couple of months, good time to chip into the name. The other one which will likely be in focus will be a HAL. And I want to quickly read out a note coming in from Citi with regard to its take on HAL. This is, of course, based on, and Citi has based its report on the press reports from the Economic Times. The shortlist for the next stage to develop manufacturing jets under the AMCA scheme, which is the Advanced Multi-Role Combat Aircraft Program, that's been announced. The confirmation is that the shortlist includes 3 players, L&T and BEL, which is the JV of L&T and BEL, Tata Advanced Systems, and Bharat Forge, BEML, and Data Patterns as a JV. There were 7 consortiums that have bid for this. Only 3 have been shortlisted, and that is why you saw the stock of HAL tumble as a result. Now, even in pre-open, there seems to be some pressure on HAL, and I'll focus in on that one. What Citi says is that likely the development has no impact on HAL's existing order book, of course, but it seems that it's not been shortlisted due to the fact that one of the clauses discourages companies with an already very large order book from participating. And that could be a crucial negative, because that is a shift in terms of policy. Rahul, how much of a negative is it for HAL? This huge correction again that we've seen, and likely if it were to fall anything between 5 to 10% today, it could well be a large correction. Should this be bought into? Should this be an opportunity in terms of those who haven't participated in this story yet?
So I think defense as a sector, if you look at it, last 2 years have done quite well, and I think one of the best performing sector if I look at it. And if I come back to the most of the stocks have done well last 1 year as well. So I think coming to HAL, I think one of the very well placed and very well reasonably valued vis-a-vis most of the other stocks, and best in all the parameters if I look at it in terms of valuations, in terms of ROE, in terms of growth perspective. So I think very decently valued at this point, this juncture. This news or slightly negative for the HCL, and I think in this, if we see, as you rightly said, 5-10% would remain could become a very good buy and attractive buy for the investors. So I would advise to buy HCL, and one of our preferred bets in the defense space is HCL for the investors. So I would ask them to hold or buy at any declines in HCL.
Harsh, if you look at this entire order,
yes.
It's a fast track